right, good morning, everybody. Happy Monday. This is the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso with you on this good morning. Is it a good morning? I guess it depends who you ask. Man, what a weekend on the social media world. Oh, my goodness. I can't remember a weekend like this in terms of stock market agita. Everyone's got agita and anxiety. It's going to be a crash on Monday. And yeah, we're going to open down today, but I don't know. Crash is a bit of a strong word. We'll talk about all this. We got a lot to talk about. Trade war is back on the menu, and the market's reacting. So let's talk about that and see where that gets us. Our guest today is going to be Sal Gilbertie from Teucrium Trading. He's got a handful of, or his firm, I should say, has a handful of commodity-based ETFs. We'll talk about that. And that'll be at 9. We'll have Kenny as well. We'll have Sam Gatlin on the show. And yes, trade war and volatility back on the menu, at least for now. And I hope you all are ready for a good one because people seem amped up today. Maybe it's the volatility or the fact that we had all weekend to talk about trade wars on the internet, but people are amped. People are ready to go. I'm fired. Are you fired up? I'm fired up. Let's go.
All right, we are back, ladies and gentlemen.
Good morning.
I got no voice, so I'm gonna be in and out quick.
What did you do? How did you hurt yourself?
I mean, dude, I have like 1 million kids, so they're just like all sick, in and out of the hospital. So my voice is shot. We got our conference call tonight. I got to make it to tonight because tonight is like the real deal. People pay beaucoup dollars to be there tonight. So I have you caught that, right? Spencer, you got that one? That was good, right? The kids don't get that one.
Sure. Yeah.
Let me know.
Beaucoup dollars. Where's that from, Strazza?
I don't know. Is it a movie?
It is. Chat, anybody? Who's got the beaucoup dollars today? No?
What's it mean?
It means a lot of money, but like sarcastically, because they were talking about a pizza, I think, right? Fast Times at Ridgemont High? Nobody?
Yeah.
Nobody?
It's a classic.
Tell me you haven't seen Fast Times at Ridgemont High.
It's a great movie.
All right. Also, it was a bad weekend for Drake. Yes, it was. That sucks. The entire Grammys was dancing about how you're a pedophile. Like that's probably not a good day for him, right?
You took time out of your life to watch the Grammys? Who watches?
No. So there's this app, right? It's called Twitter. I think they even changed the name recently to X, I believe. And in there, anything that is on basic cable that's worth watching will make it onto the Twitter.
What makes Kanye West's girlfriend think that she could walk around public naked?
Because she always does.
I don't know.
Just crazy.
So yesterday was just another day. She's naked always.
It's crazy.
Yeah.
I don't know. We have more important things to discuss here.
Like Canada.
Shout out Mexico.
Shout out Drake, Canada. Right? Drake's Canadian, so it's like double sucks.
I gotta say, I don't love this Canada bullying. This is crazy.
No, but they make a good point. Like I don't get into the politics or the economics, but like the fact that these people bring in all these drugs into the United States that kill people and like they don't do anything about it. Like there's something there.
Right.
No?
Oh no.
So I had to waste my morning looking into this because my mind almost exploded this morning when I heard a man on television. The good thing about the Trump administration is that his cabinet members are constantly saying crazy things. So this guy's on here and he goes, don't get it twisted. This is not a trade war with Canada. This is a drug war. And I said, what? Fentanyl comes from Canada? Fentanyl doesn't come from Canada. It comes from Mexico and China. Everybody knows that.
I didn't know that. Okay. I just learned that today.
Like a trace amount comes from Canada. Trace amounts. Right.
All right.
19 kilograms of fentanyl was seized at the border from Canada last year. Over 19,000 came from Mexico. So there you have it. Like, this isn't about drugs at all. And it's mean to say that about a country. I think it's terrible.
All right. I love Canada.
We all love Canada.
I'm pretty sure I love Canada more than all of us combined. That's how much I love Canada.
It's ridiculous.
Right. Can we do like
good eating in Canada?
Can we do like a state of the markets thing?
I can eat.
We got a lot of things happening this morning.
Part of the CAD too, and the way it's set up with all this going on. Interesting stuff. Probably not a top.
All right.
Yeah, we'll see.
Let's see. All right, ladies and gentlemen, I'm going to try to power through here on some of these morning futures. I was told the market was going to crash today. Dow's down 1.3%. It's like a normal day. Down 600 points to the downside. S&P 500 futures down 1.6%. That's less than 100 handles. So I'm not really sure what all the to-do is about. The Nasdaq's down less than 2%, less than 400 points. That's 21,200. And 30-year bond futures were flat last night at the open, which I thought was interesting. Up about 0.5% this morning, 114.5. Crude oil up 2.5%, 74.5. Copper flat, literally flat. If the world was coming to an end and the market is crashing, would copper be flat? Gold up 50 bips, 28.5. Silver flat, 32.25. The VIX is up. VIX is up pushing 20. And then over in funny money land, we got Bitcoin. Really took the brunt of it. Cryptocurrencies down to 95,000, down 2.5% on the day. Ethereum down 300, down 10% on the day, under 2,600. Solana back under 200, 195, down 4%. And total crypto market cap, Spencer Israel, 3.04 trillion.
Oh boy, yeah.
Dollar index up this morning, well off the highs though.
I had to do a double take last night. Ethereum was down 20%. I was like, what?
Yeah.
And for those keeping score at home, I always talk about how I never look at the futures on Sunday night. Last night was a futures night. I was on my computer. I was like, I just got to see where we open here. Everyone's freaking the hell out about this trade war. I just got to see how bad it is.
Are you buying the dip? Because we're already just massive wicks in risk assets, and we haven't even opened today.
Particularly cryptocurrencies. No. What stands before we get into a few charts? What stands out this morning in the futures to you?
First of all, you fade the bearish Canada stuff. We've been through this before. No one will even be talking about or even remember this a few months from now, probably even a few weeks from now. The way Canada set up this massive multi-decade base, I think that eventually breaks out. I think the top, this massive top in the CAD is probably not going to be a top. There's huge support right below the level that we just broke when you zoom out on that chart. So I think you fade Canada. And then in terms of buying this dip, but for me, I look at these charts, structural trends are intact. The primary trends are intact. There's definitely tactical damage in certain areas, not others, but it's all very JC, garden variety.
Here we
Even
go.
Some of these cryptos that have been rocked. You know what happened last night? A lot of them went from like the 38% fib retracement to the 62 and then wicked off of it. And now we're right back at the 38. Like, this is all very standard corrective action. Drop VWAPs at either the election candle or the August 5th candle. Like in something like Solana, go drop it from August 5th. You'll see what I'm talking about. Let the VWAPs kind of guide you through this, but it's probably a dip to be bought already this morning. I'm dropping VWAPs all over these cryptos looking for opportunities. However, I will say selling my soul a couple weeks ago, as it turns out, for now, seems to have been the right move.
Nice job. What about copper flat?
I like it. Probably works. All these commodities.
I'm not saying buy copper. I'm saying, what is copper being flat suggesting about this risk-off environment?
I'm not going to overthink it. We lost copper gold. I don't know how good that information is these days.
How do we feel about China being closed? Because in communism, they just shut things down for a week for no reason at all. So,
well, it's not no reason. I mean, it is, a celebration of
for New Year's, bro.
Yeah.
You're shutting down for a week. Come on.
Hey, man.
Is that really necessary?
I don't make the rules.
No, I know you don't make the rules. Thank the Holy Lord. But the people that do, I don't know. It just seems irresponsible. And that's just something, in capitalism, things like that wouldn't happen. They just shut down completely.
Yeah, for like 2 weeks.
No, I don't like it. It's crazy.
It's
you
crazy.
Can't do that. They got to get away from that.
I'm looking at
China's
the Shanghai Stock Exchange trading schedule. And according to the calendar here, Chinese New Year is celebrated from January the 28th, which is a Tuesday, until February the 4th, which is a Tuesday. And then they also add February 8th.
That's way too long. No one wants to celebrate anything that long. Sounds like a terrible time. So no one's working?
It's wild, man. It's wild. Listen, I understand it's the culture. I by the way, in America, we have this thing called freedom of speech where we can say how we feel. And I think it's stupid. You are welcome to think it's intelligent or smart or creative. You have that right. I think it's dumb.
Yeah. A lot of bad takes.
By the way, long China. So like, you know, I could think something's dumb and still buy it.
So not
I thought
much
the
on
fart
the
coin
AI.
was pretty fucking stupid, and we bought that and did very well. So, you know, again, right?
Yeah. You know how good fart coin did for me is it's getting smoked here and I'm still up. That's how good it was doing.
Hold on, I want to show something that we didn't talk about last week.
Spencer, you nailed it. That's the corrective action that I'm talking about, right? Something like Ripple, H-bar, any of these things, they're up 4 or 5x. So the corrections feel deep because they have been, but you zoom out a little bit and they're just massive flagpoles into these things that probably won't end up being tops because that primary trend behind them is so
overthink the fart coin.
Here. Zoom in here. Zoom in here. So
put the VWAP on your fart coin.
That's the quote of the day. Put the VWAP on your fart coin.
I don't even know how to do that. No.
What?
How do I? Fart coin is not like on any chartable platform that I know.
Of course it is. What are you talking about?
Okay, I don't know.
Come on, Spencer. You're killing me, Smalls. Hold on. Let's move
My
on.
bad.
Let's move on. So here we're looking at a chart of the Shanghai Composite Index. Steve Strazza was not with us in New York last week, so he took this great picture with me and Dan Ives. But if you look at the upper right corner where it says the Strazza letter, Strazza was with us in spirit.
Yeah.
I caught that this week, and I was like, oh, he was kind of there.
Yeah. I'm sure that happened a lot. Well, what?
Must go to the chat.
No, because you should have. At the end of the day, you should have been in this picture, right? Obviously, because you invented it. It is such a great picture. So you were kind of there in spirit, right?
My name is stamped on it.
That's right. Well, your family's name. I don't know about you, but your family. Shout out to the Strazza family.
Did somebody change our settings in TradingView?
I'm
operating on a new system here.
Okay, hold on.
I don't know.
I want to go over 3 charts before I hop today. We got our conference call tonight. So Spencer, if you want to drop the link,
Of course.
anybody who's not a premium member of All Star Charts and wants to hear what my voice sounds like tonight, oof. Strazza might have to host it, by the way. I'm struggling.
I was just gonna say, call in the backups.
I know.
I'm ready,
Coach. I know you are. Maybe we'll do it together. All right, we'll see. Drop the link. If you're not a premium member of All Star Charts, I don't know what you're thinking. But it's tonight, 8 o'clock. But let's talk about a few levels. First, the S&P. Slide 3 there, please. So here we're looking at 560 on the SPY. For above that, it's business as usual, right? Higher lows, higher highs, all-time monthly closing highs for S&Ps and the NASDAQ, by the way. So above 560, business as usual. Look at the NASDAQ. 500 is the big level there for the Qs. Still well above that, Spencer.
Sorry.
Right? So still above that 500. And then for the Dow, 42,000. So those are the big 3. If we're above those levels, it's business as usual. I don't see any reason to overthink this. Below that, now we could start, looking for reasons to maybe get more defensive, more bearish, as opposed to buying the dip and looking for stocks to buy, which is what we're doing. And the last one, Spencer, there is a monthly line chart. Just to remind everybody that we just closed on Friday at the highest levels for the month in human history.
This is great, JC. It's great context. Zoom out on these charts in times like this. And if anybody's looking at this and saying, "Oh, that those levels they're too far, south for me. I need something for shorter term," go drop a VWAP from the pivot lows or from the election candles. Right? Ways to do that. I think what you just pointed out is that all these trends are very much intact.
I got one more chart because I specifically want to hear Strazza's thoughts on this. This one comes from Slick Rick. The new slide 7 there, Spencer. This one comes from Slick Rick. Rick sent this over the weekend. I was like, wow, this is a chart, right? Like when you talk about like a kid that's got potential, I wasn't making charts like this at that age.
Oh yeah. Yeah, he wants me to talk about this.
Ooh.
Like I know anything about Fannie
Well, you
Mae
know more than me and him combined.
You never hear about these guys.
I know.
Yes, you do. Now you do.
So look, huge base.
These companies, Spencer, there was a time they were on the cover of the paper like every other day.
Spencer was in junior high school. So
JC remember.
So we're looking at Fannie Mae and Freddie Mac with an anchored VWAP going back to the great financial crisis highs in October of 07. Look at that base. Look at the new multi-decade high. What do you think about this?
Fantastic. These are GFC bases. They exist. There are still some out there.
GFC bases.
AIG.
I like the sound of that. GFC base.
Yeah, it's a GFC base. Like if you're wondering what they look like, massive one, if I remember correctly, an AIG. Let's see. Yeah, go look at AIG, right? Citigroup has a historic GFC base, and it looks just like this right now. We start filling that gap. These are the most beaten down financials, right? Structural trend basis, right? Like these are the worst looking ones, plunged during the financial crisis, have not gotten back to those old highs, have not even gotten close. But once they get into that gap zone, that's a memory gap right there, shown on the left-hand side of the screen. Buyers and sellers simply didn't transact at those levels very much. And then we spent.
Can you rewind for a second? A memory gap?
It's a memory gap.
Explain what that is.
Yeah. It's like a volume pocket. So it's a pocket of space on the price chart where there's simply not much price memory, right? There's not much
memory gap. I like that. Did you just make that up, or is that a thing?
No, I think it makes sense.
Oh no, I think it makes perfect sense. I just never heard that before. Memory gap.
And you treat it in the same way you would any standard price gap, right? Once you get into that zone, price can act as a vacuum. You get some.
All right, so quick questions. Ready? Yes or no? Number one is this bullish for stocks in general, or does it not matter?
Is what bullish for stocks in general?
This is too niche, right? At this point, Fannie Mae and Freddie
doesn't matter.
No, because they just do what they do.
Is this bearish for stocks?
This is
definitely not. But what I would say is there's a I could take this one step in another direction and say Citigroup or AIG looking just like this and completing the same patterns, getting into these old memory gap zones. That's
why don't we create an index of the survivors, like the great financial crisis survivors, like
most banged up ones,
like AIG,
throw like a Lloyd
City
in there. Yeah. Deutsche.
Can we not overthink Fannie Mae and Freddie Mac? They don't even trade on an exchange.
Well, Spencer, what
they
is
don't
your
even
take?
trade on an exchange. First off, so they're what?
Okay,
yeah,
that's fine.
They are routinely the most traded securities on the over-the-counter markets for whatever that's worth. But Bill, someone mentioned in the chat, Bill Ackman has been long since election day, basically, right? And the bull thesis has been the same for basically the last 10 years, and that is
I didn't know. Ackman just got long and made it public.
And the bull thesis is very simple. One of these days, or weeks, or months, or years, the government is going to these companies are no longer going to be controlled by the government. They're going to actually return capital to shareholders, which they've not been able to do since they got taken over 15 years ago. And that's the bull thesis: is that these companies are going to be removed from the conservatorship, or whatever you want to call it, that they're under, and then. If you're a shareholder, you'll actually get a right to the profits from these companies. And that's
by the way, I didn't know that, and that's great. That's some great color. Thank you. I didn't know that, but that's the same bullish thesis for the banks right now. That they'll be able to finally return a ton of capital to shareholders that shareholders have been waiting for and haven't been able to get their hands on because stupid laws.
Two more things, and I gotta hop. Number one, Sean's super liberal wife is looking to short S&Ps. Sean's wife never mentions the stock market ever. She literally asked if the S&P 500 can be traded, and she wants to short it. After Sean said that we could just dollar cost average, it's not a big deal. She wants to short it. So that's number one. That was this weekend. Number two, my father texted me on Saturday night about how bad the market was going to be on Monday. My father has not texted me. My father never talks to me about the stock market.
Why? What was his reason?
Tariffs. Like, oh my God, the market's going to crash on Monday, right? And then the last time he texted me about the market, because I tracked this in a chart, was February the 5th of 2024, when he was telling me that Chinese stocks were going to crash. Number one, I didn't realize he knew that China had a stock market, yet alone him going out of his way to think that they're going to crash. How did Chinese stocks do after February 5th of last year?
No, yeah, absolutely.
So the contrarians are coming out. Sean's wife, my father. If my grandmother calls me, I'm taking out a mortgage on my house and I'm buying more.
No, I like it. This is turning point stuff. It's inflection point stuff. I also think that volatility spiking in both directions for a lot of risk assets right now, that's also like, decision time stuff. So we've and cryptos especially, if you look at something like Solana, Binance, Ripple, maybe not so much Bitcoin, but even Bitcoin on certain timeframes, you got huge spikes up in November, December, even some recently like Solana, and then huge sell-offs, some of the worst sell-offs we've seen in quarters or even years for some of them. When you get volatility spiking in both directions, you usually get resolution. So whatever direction I think we start to go in, you want to follow here.
So the last thing I know you're going to be talking with Sal Gilbertie, Teucrium. Dude, these guys used to love us back in the day, like when we used to actually put like ticker symbols and put the dollar, like when cash tags used to be a thing. They're not anymore, but they used to be. Yeah. We were the only ones tweeting about CORN and SO. You know what I mean? Like we were the only people tweeting about, these commodities ETFs. So he's loved us for a long, long, long time. So friend of ours, friend of the show. Sorry to miss you, Sal, but I can't talk. So I love you guys. Strazza, try not to get us canceled. Adios.
Wait.
Bye. A lot of these Teucrium ETFs are set up really nicely here. I don't have my Chart Ninja. Do I have a Chart Ninja? Fonz.
You have half of a Chart Ninja.
Corn, the soybean. Sam likes the soybean.
Yeah. All right. So why don't we do this? Let's talk to Kenny first, see what he's doing, and then we'll bring Sal on. And I know Sal sent us a few charts as well. So, Kenny, are you here? Kenny's hanging out. Oh yeah, Kenny's always hanging out.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Hey.
Good morning.
What's up?
What's up?
Is the world ending from this trade war? No, you don't know?
Well, I went short over the weekend, and I was telling everybody the signs were there.
Wait. You went home short on Friday night?
Yes. Friday was was my holiday. If you want to know, I don't really believe in organized religion, but Friday was my holiday, a full-blown earnings reversal day that spread across the entire market. When Apple, one of the most popular stocks on the planet, does the 1-minute multi-day VWAP reversal and takes the whole market down with it, with volatility going up at the close, those are the weekends that I stay short. Now, if you guys follow me on social media, you know we were up last night. Look at the futures right here. This is your futures on the NQ chart. If you guys know, the NQ is the QQQ, and the opening tick was the low of the entire evening. No fear.
Don't you love to see it?
No fear whatsoever. What's up?
No, you love to see it. Like there's all this fear. Boom, opening tick, gap down. Oh, that's the low.
That's the low.
That's the low.
Right. And then again, what I was trying to do is I was trying to find a spot to hedge because I didn't want to walk in. Because again, I've seen the futures down 500 or 600, and I'm thinking I'm walking in with a nice gain in the morning, and then the futures are up. So I wasn't about to let that happen. So I actually hedged my short by buying some futures right before I went to sleep, using those low prints as my out. And basically that was the hedge. So that's where we're at. So if you were looking to buy the dip's already been bought. So this morning I'm a little bit weary. Again, going back to the QQQ.
It's been bought a little bit. I wouldn't say,
Right. I mean, it's been bought to the point where that easy money to buy the dip was in place, that 507.50 area. And again, if you guys are nervous, think about this is the 6-month chart. Well, here's the yearly chart. We're nowhere. Well, if we start breaking down under recent lows, that's when you start to get concerned. And that's under 500 on the Qs. And even if that does happen, even if we do give way to all the levels where I think we could this year, still inevitably it'll be a buy on dip situation, and we're gonna make money on the way back up. So because that dip has already been bought, I just chilled this morning and I just wait for the stocks to play out. And again, if I miss an opportunity on the way up or on the way down, this is the time where you just let it happen. And if nothing gels with the way we trade, it's okay, because Friday was probably, I would say, top 20 days in the history of trading. I'm not trying to even exaggerate on that one. It was special. It was special because the trade that we cultivate, that 1-minute multi-day VWAP reversal trade, the one I'm talking about that works pretty much every time it shows up, the entire market did that. So if you were just banging your head on the keyboard and hitting sell on Friday, you probably did all right. And that was, again, those are those easy days where the knowledge that I bestow upon everybody as far as the day trading is concerned, that was what happened on Friday. So today, you just sit back, relax, and
So do you come in on a day like today? And I'll let you go, but do you come in? You wake up, or last night you see you opening gap down. You come in this morning, a lot of stocks down this morning. You come in just like licking your chops, looking just like levels to buy.
Oh yeah, absolutely. Yeah. Again, my bearishness, the way I'm bearish nowadays is that I realized you can't make money shorting for any extended period of time. That's why I was covering last night as soon as we started going up. But speaking of licking your chops, I wanted to see the market worse this morning, because then once you get oversold and you break VWAP, you really have a beautiful rally. And that's really what it's all about. And again, going back to the day trading versus swinging versus long-term investing, once you understand the market mechanics, the day trading is the same thing as swinging and investing. It's just on a different time frame. So, going back to what we're looking for, the market is it's right now, it's just in a big trading range, and it's fantastic. So again, this morning, my friends, I no biotech stocks, nothing else. I'm just watching UVXY, QQQ, some of the big tech stocks, and I'll just look for a reason to play the dip. And if that dip gets violated, and again, if we're breaking down, let me show you the one levels I'm looking at. It's just basically the lows of the day. We're not going anywhere right now. So if we break down under that 512 on the Qs, we could easily get 2 points to the downside, and I think that's what I'm going to look for. But right now the selling is contained. UVXY is up a measly 2 points. So those first 15 minutes of the day, just going to chill and then let the market tell me what to do.
If you guys doubt the power of the VWAP, true story. Last week, we're on the floor of the stock exchange, right? We're talking to Jay Woods. And Kenny, what did Jay Woods say? He said in his career as a trader on the floor, nothing, no technology, no single thing changed the game more than VWAP. That's what he said, right? VWAP changed the game. It was like the biggest innovation in trading. Right.
And now more and more as the years have gone by, people have now used it in different types of applications and different types of setups. Again, I've been spending, almost a decade trying to find the best setups. And again, that's why earnings and VWAP and chart pattern recognition is that preparation you need to take advantage of what happened on Friday. And, again, pretty much every day. So that's where we're at. Yep. It's the way to go. It's the way to go. It's changed the way I look at the market for sure.
Listen, guys, hitthebid.com. That's where you can find Kenny. He's there. He's there right now. He'll be trading through the open, making money. That's what he does.
All right. Good luck.
We'll see you. All right. New guest day. I love having new guests on the show. If you have a new guest on your bingo card, you can exit off. If you have no idea what I'm talking about, I will drop a link to the bingo card in chat in a moment. I did that randomly mailed that a few months ago. But Sal Gilbertie, Teucrium trading, and let's talk commodities and let's talk commodities and ETFs. Let's do it.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hi, Sal.
Morning. How are you?
Good morning.
Good morning, Spencer.
How we doing?
Doing great.
Where are you from, Sal?
Connecticut.
Where do you live?
I'm sitting in Connecticut right now.
Oh, that's great. I grew up in Trumbull.
Okay. Wow. I'm in East. I'm actually sitting on a farm in Easton right now. Right
That's
next door.
fantastic.
That's cool.
That's-
If I had known,
Oh, well.
I may not have asked Sal on the show. Too much Connecticut on the show. All of a sudden.
Spencer doesn't like it when we get too Connecticut on and we start talking about sandwiches. And pizza.
Yeah. It's funny. I have a friend who I learned it, and he wasn't from Connecticut. He said he loved to eat sandwiches because you know when you're done.
Right. What's the best sandwich shop near you?
Oh,
Best
geez,
deli?
there's a place called Tasty Yolk now. Do you know that place? And
I
they
don't know of
make
it.
unbelievable sandwiches, and not just with eggs.
Awesome.
They have a turkey sandwich that's just off the charts. Turkey sandwich,
But I'll bet they have some solid bacon egg and
absolutely,
cheeses.
absolutely. And they don't care what the price of eggs is.
Do you ever go to the Gaetano's?
Sure, yeah, that's real. Italian deli.
Closest one to you is what, like Southport?
Probably, or maybe. I mean, if I'm sitting in Easton, isn't there one in Shelton? That might be closer. I don't know.
Oh, there is. There is over by all the office buildings.
Yeah, exactly.
You're right.
Okay.
They keep
Anyway.
moving around. All right, enough sandwiches for Spencer. Sal, tell us a little bit about your background. You said you're on a farm. I know you specialize in agricultural commodities. So you've been doing this for a while. How did you get into it? How'd you get your
by accident, I went to Fairfield University, and there was a job posting on a board that said, and this is a very long time ago. Okay, it's very long time ago. It said Cargill, and I didn't even know who Cargill was. But it said an agricultural trader, so I looked them up in the library with microfiche. There was no internet. We're going deep back, deep history. And went to the interview, wore my girlfriend at the time, who's been my wife for over 40 years, and she gave me a tie with pigs on it that I wore to the interview. And I just said, I was really aggressive with the guy. I said, look, I didn't know who you were. Here's what I studied. This is pork bellies. I want to trade. I want to work for you. And he hired me. He had me right there. But I ended up being a petroleum trader for them.
Where was that out of?
My
Like, where
first
was
job
Cargill?
there was, after we always call it the corporate brainwashing in Minnetonka, Minnesota, which was terrific. I got put in 59th and 5th in Manhattan. And I was answering to Geneva, not Minneapolis. So it was really good fun.
Wow.
Yeah.
Wow. And how long did you do that for?
2 years. And then I went off that class at Cargill. No one stayed. There were 40 of us.
Yeah.
We called it the University of Cargill because we all went through the training, and it was terrific. I mean, they stuck you in Iowa at a grain elevator, and you had to buy corn, and you did everything. Then I was in shipping for a while. Just the training program was unbelievable, and you just learned about commodities. And that's what I did. And I've always focused on energy and ags ever since then.
And so you've been trading futures all this time?
Yeah, futures usually for the house and physical. Cargill, we were shipping stuff around pipelines. It was wonderful. Buying from Russia. At the time was the Cold War, and we had an office in Moscow because of the grain trade. So we could buy, Russian gas oil. In those days, it was illegal to ship into the U.S. So you could bring it to Rotterdam, switch the flag on the ship, and while it was sitting there for 3 days, take the specifications of the gas oil, which is heating oil. Okay. Pump enough jet fuel in it to get it on spec to be north of New Haven and ship it across the pond and get heating oil into the U.S. It was really fun. It was really good. Yeah.
So we're really having you on at a great time. Then I have so many questions. Why don't we start with, I mean, all the talk today, this morning, is the tariffs. What do people really need to know? Or what do people who are, in these futures markets, what are the commodities that are, likely to be most impacted based on all these headlines?
Remember, so we're talking about what the U.S. buys from these people. So it'd be different. Like Mexico is the number one corn buyer from the U.S., but that doesn't have anything to do with us. You see what I mean? So we buy a lot of energy, and more from Canada actually than from Mexico. But a lot of natural gas and a lot of crude. And crude oil is my phone was ringing at 7:00 this morning from guys in the Midwest and West. Friends of mine that are still out there trading those products, and they're saying, as you may or may not know, you just can't turn a refinery from one crude to another. It's it's really complicated. Each crude has its own specification, so you would tweak your refinery to run that crude through there. If suddenly and they said 10% tariff to make it easy. Well, guess what? If your feedstock in a particular refinery goes up by 10% because you're buying all your crude oil from Canada to run through that refinery, you're doomed. You're going to shut that refinery down and do maintenance until this all straightens out. Or so you got a lot of places, probably mostly in the upper Midwest, that are going to see potentially problems with products. So gasoline, heating oil, jet fuel, things like that, where you're going to have to import them from elsewhere because they just can't tweak those refiners. And you're not going to keep them running if your feedstock price goes up overnight by 10%, unless the products go up correspondingly and you get your margins.
You would think this kind of dynamic would be bullish for the price of crude, but we just got a little pop, coming into the month, and it's really
crude trades by grades, so it's different. You have to buy a certain spec. Some refiners run heavy crude, some refiners run light crudes, and you've got to kind of replace those. You can't just switch from heavy to light or light to heavy. It's not like that. And so I think that's the refiners are probably the biggest affected here. I would think everybody else is just adjust your numbers. The refiners, you got to tweak the engineering in your refinery and figure out alternatives. And you're not going to run for too long at a deficit, at a margin loss. So I don't know what's going to happen in those areas. You're going to see people scrambling to replace the same type of crude. You're going to see people scrambling to buy products that they're not making so they can fulfill their contracts. So I think the biggest impact is going to be, no question, in energy and probably in refined products.
So the prices of things like gasoline and heating oil?
You're going to see spots in the Midwest where they go up for a while is my guess.
Okay.
But look, everybody adapts and adjusts. Like natural gas. I mean, I was looking at it over the weekend. It was up like 10% at one point because everybody's saying, oh my God, we're not going to be importing natural gas. You got to look for it in the U.S. Well, that's fine. And look, at the whole point of the tariffs, well, who knows what the real point is? It might be to get rid of the income tax, some people are saying, and just get us used to alternative forms of income. But the bottom line is the whole point of tariffs is to support your domestic production, support your domestic businesses. And so people will find a balance. Energy is fungible. Just about all energy is fungible. It's hard with natural gas because you need a pipeline, obviously a closed system, but it'll all straighten out. The biggest problem here is uncertainty. Your prior guest there going short into the weekend, that was probably pretty smart. I mean, uncertainty, markets hate uncertainty. Everything else is fine. They get along fine. So.
The last time Trump came into office, there were a lot of tariffs announced. I feel like, similar stories today with all these headlines when he first began his first term. Are there any lessons learned from back in 2016, 17 when we went through this last time?
Well, for Trump in general, we've seen the show before, and it generally is pretty good for markets, even alternatives. Steve, when I reached out to you about that solar, everybody says, oh my God, alternative energy is going to get crushed under Trump. Guess what? It does great because of the deregulation. It's got nothing to do with whether you like alternative energy or not. It's just everybody gets to be free, and the most innovative minds are in the leading edge technologies. Leading edge technologies are their alternative energy, so they're going to do great when you have less regulation. That's an easy one.
It's easy for people to think this party good, this party bad, but you just take it one step further and really actually think about the regulations that are likely to come. And a lot of times it's very different from what they would like you to believe, I guess, and what gets reported.
Yeah, that's right. And I mean, there's a political message, and then there's the real economic message. What we all care about is the economic message, and you guys read that on the charts. That's what's so great about you guys. So.
And you know what else, Sal? If you like that one, I'm going to see if we have it so we can throw it up. There was another one that we did. You know what one of the best performing industry groups was under the Biden administration?
You're going to tell me.
It was coal.
Okay, I mean, you make it difficult for somebody to operate. Those that remain operating get to charge a premium. Okay, and the agricultural products. If China gets mad at us, you keep track. And commodities are. This is why I went into commodities. Okay, I'm not as good a chartist as you guys. I'm not smart enough to analyze stocks and bet on management. But supply and demand. Commodities are supply and demand. And so the last time we had Trump in, you had this big thing with soybeans, okay? But guess what? The world grows X amount of soybeans and we use them all. So all that happens is if somebody gets mad at you, they're going to buy your soybeans last, okay? And that's why these dips on tariff threats, they're buys. Because, okay, your biggest buyers stop buying for a while. All right. But guess what? They have to come back in. Brazil will run out of soybeans and you got to buy from the U.S. So there's things like that that make commodities really fun. It's basic knowledge that if you know that, you can make a good deal of money.
Some of these smaller markets like soybeans, that's true for. Like you just know the players and they're almost forced buyers. Wow. Are there any others like it?
Well, corn to some extent, wheat to some extent. I mean, wheat's grown everywhere, okay? Soybeans are grown a lot of places, but they're only exported by, in order, Brazil and the U.S., a little bit by Argentina. Paraguay is a blip. Nobody else even matters. There isn't anybody with exportable soybeans, okay? Corn, you know, you can go top 10, top 5. Most people didn't know Ukraine was a top 5 exporter of corn, the number 1 exporter of corn to China. That hurt, you know, the corn export markets for a while. But look at ags trade at their cost of production. That's what people need to understand. Their natural place is to trade their cost of production because everything is subsidized. Everything in agriculture is subsidized. So when you see a chart that's come out of a downtrend that's going sideways for an extended period of time, that is the futures equivalent cost of production. That's when you layer that in. These aren't, you know, quick trades. You have to understand, ags don't really correlate very well to anything. And so when they get down to their cost of production, they're a nice thing to layer in as a portfolio stabilizer that will give you some positive alpha in the end. Like corn under $4, okay? Corn under 4 is like oil under 40. Oil gets under 40, people just buy it and wait. They know oil's going back up to 60, 80, 100. Well, corn goes under 4. You know it's going back up to 6, 7, or 8. You might have to wait a while, but it's going there. Okay.
I love it. And these commodities markets, you're right. They experience long-term trends. When these trends, when these trend reversals take place, the uptrends or downtrends that ensue tend to play out over several years. I love the way that those markets are built that way. Not all markets are like that. Currencies, for example, would be very different. Tend to be very rangy. You don't get these multi-year trends.
Sal, can you explain this chart?
Sure. This is a 17-year chart. This is from when? This is, I think it's spot corn futures. And this is just to show people that 3 times in the last 17 years, corn has doubled from 350. Okay. And it goes back to 350. The 350 to $4 area is the break even. Bloomberg says it's 375. We think they're right. It might be a little higher now. If corn gets to $4, I had an advisor call once. He said, look, I weight it into my portfolio, WEIGHT. Then I wait, WIT. And when there's a drought, I get out. Well, if that guy did that 3 times in the last 17 years, he doubled his money, okay? And you need to get out. And if you're really aggressive, you get short and you just wait. So the bottom line is you need to know this stuff, but once you know it, you can see it on the charts. It just goes sideways because it's subsidized, and farmers will stop planting. It's not like crude oil where you can't shut a crude well or a natural gas well. You can't just shut it because then it doesn't come back on, right? So crude went to negative when we had a surplus. When grains go to a surplus, farmers just stop planting. There's not an amount that's going to come that's going to drown you.
It's just fantastic. It comes down here around whatever the cost of production is, and then it bases and it pops every time.
Yeah, that's right. That's right.
And then are soybeans similar?
Soybeans and corn share acres is a very similar chart. Corn's just so big. I mean, they both are. People say to us, oh, you know, sometimes the ETFs are small. There's not much money in them. But, you know, you'll see a 50 million ticket drop and it doesn't move it a penny. These are decabillion notional value markets, and ETFs with liquid underlyings. If you trade that ETF while the underlying markets are open, there's no limit to what you can put in there. It's just, they're liquid.
Do a lot of these farmers, like, they have the choice whether they want to plant and grow soybeans or corn? Like,
they have it every year. I mean, the old days before synthetic fertilizer, you rotated, okay? Corn sucks nitrogen from the soil. Soybeans put it back in. So you plant soybeans 1 year and you fertilize your soil. You plant corn 1 or 2 years, it sucks it back out. Then you got to put soybeans back in. Now you just take nitrogen-based fertilizer and slap it on. They do corn on corn on corn, depending on the economics of where they're going to make more money.
That's interesting, though. And farmers will do that based on different markets, right?
Farmers are as price sensitive as you can be, and they're really good risk managers too. Farmers are really good risk managers. Yeah.
Wow. So, Sal, I want to talk about the funds quickly. Are you trading for the Teucrium
So,
funds?
well, I don't
like
do
what
it.
you
The traders do it, and so they're long only funds. Okay, these are not actively managed funds. These are long only funds, actively managed in the sense that you somebody's saying, all right, we should be long this and short that. They're long only funds. So these are more portfolio components. I mean, when grains are in the headlines, or you guys put out a buy signal or a sell signal, great. People are in and out of these pretty big. But when Russia invaded Ukraine, our wheat fund went from 80 million to 800 million in a couple of weeks. Like, money poured into these things. It pours in, it pours out with the cycles. If you're not watching the cycles, when you guys have chart signal, people come in. Otherwise, these are portfolio components. When grains get down low, people put them in as a stabilizer and just sit on them until they know. Basically.
Totally. Yeah. So a lot of people are using them as trading vehicles, though.
They are, yeah, absolutely. It's better than having a futures account for most people. So easy.
So the idea for something like corn or wheat or soybean is to track the price of the underlying commodity. What contracts are they investing in?
So we designed these to not be in the front month. So our core, our core funds, our old legacy funds, our original funds, they have second month futures, third month futures, and then an anchor month. Okay. And the reason I did that is I knew people would be buying and holding these as a portfolio component, and you want to be where the farmers are trading. So the anchor month is usually the one that farmers use to hedge. And so that, these corn, and sometimes you'll have 2 Decembers in there. So you're all the way out the curve. When you roll, you're not getting that slippage, or as much of that slippage. You can't avoid it, that people talk about. So that's why we designed.
I miss, you guys used to have, I think, a coffee one.
No, that wasn't us, but there were a whole bunch of notes that all got delisted. And
ETNs.
They were ETNs.
Yes.
And ETNs run their own risk. But they're a good vehicle. But look at these funds, it costs a lot to run a fund. It even costs a lot to run an ETN, and everybody's just delisting the ones that don't get enough interest. And until coffee caught some wind, when it really caught some tailwinds here. But that's, again, two years in a row of bad weather with coffee. Cocoa, insane. All right. Heading for your 3rd year of bad weather, and 3/4 of the cocoa in the world's grown in 2 countries in Western Africa. So
there was a cocoa one too.
It was NIB. It was NIB. Yeah.
His name.
Yeah. They're all gone.
It's gone, right?
They're all gone. So now, you got to get exposure to these through a multi-commodity fund. And then you overweight, underweight. Most people probably in a portfolio construction, not primarily your trading audience, but guys that are building portfolios that are just sitting there in your side pocket. Yeah. They're having a 5-10% allocation to commodities. They'll do that with a multi-commodity fund, and then they'll overweight or underweight with energy ETFs or grain ETFs or whatever it is, metals.
Listen, these vehicles are great to have. They're portfolio diversifiers. You don't have to even log out of your equities account. You don't need a futures account. What a lot of people don't even know, because they're probably never even dabbled in the futures market. I would rather go and use one of these funds if I'm doing, trade. I'm not looking to hold it forever, right? If I'm looking to invest in one of these primary trends for a year or something, these are great vehicles. They're great options. Some of these markets, just the margin requirement to trade some of these futures products, it's like, I don't even want to have that much in my account to trade in some of these markets. You could just go buy.
Yeah, ETFs, or just a lot of people don't use margin. A lot of people use their retirement accounts to invest. It's not marginable. I mean, that's why these ETFs of all kinds, ours or other people's, are a good tool for people.
Do you think we'll ever get some of those back for cocoa or orange juice or coffee? Do you guys ever have meetings and talk about?
Call us up all the time. People reach out to us. Whenever there's a bull market in something, they call up. Where's your lumber ETF? Yeah. Where's your coffee ETF? Well, if you look at corn, literally the largest agricultural commodity there is. I mean, you could say coffee, but corn is king. Okay. And, that ETF sometimes has 100, 150 million in it. Sometimes it doesn't. Wheat, everybody in the world trades wheat. It's mentioned in the Bible 53 times or something. It's like the world's most political commodity, even more than oil. Right. The thing goes to 800 million and back down to 100 million. Like, there's not enough interest. Business. There's not enough interest to make it pay.
And it's just too volatile for the fund managers.
Maybe. I mean, commodities, as a basket, commodities are no more volatile than stocks. Okay, as a basket.
I mean, the volatility of the AUM, though.
Yeah, well, but that doesn't matter in terms of price. Like, the price is the price based on the underlying. So, yeah, but for me as a sponsor, the volatility is really, it doesn't pay to have an ETF that's not going to have 30 to 50 million in it constantly. It just doesn't pay.
the way it tends to go, unfortunately, because of the psychology of the market and the way that we all move in herds, is we get these fund launches, and something we watch for, sentiment read. We get these fund launches at the tops
right.
when you don't want to own these things, and then they close them at the lows. Like they took away all these commodity funds right before we needed them, like 4, 5, 6 years ago, before the 2020 lows. All of them disappear. Something like coal, KOL, we used to have a nice coal index we could trade. That disappears at the lows, and then they launch new ones, and it's usually like a cycle.
It's true. It's true. Well, we've been around 15 years. Our corn, soybean, wheat funds and sugar funds have been around that whole time, and we're not going anywhere. So, but that's why we're careful about what we put out there.
We're big fans. We write about them in our commodities column every week, or every now and then. We keep them in our universes. We watch them for information, and like I said, I use them for vehicles. The guys who are doing all the commodities work, they'll ping me. They'll be like, "Hey, did you see the corn? Did you see the wheat?" I'm like, "Let's go. I'll trade these things. I'll trade anything, Sal, that's trending." And a lot of
that's
times,
why we're here.
A lot of times these commodities are trending when other things aren't. So it's nice. You go, you hang out in the commodities market, you catch something trending, while other risk asset markets are stuck in range.
That's the thing, and a lot of times, stocks are down pretty red. And you look at the grains. Well, just think about it. No matter what stocks do, there isn't anybody skipping their bagel in the morning in New York or New Haven. They're just not. So that's right. Grains are stable. Yeah.
No, they're fascinating markets. All right. Well, thank you so much for joining us. This has been awesome. We're gonna have to
wait. I just have one more. Sal, when are we getting the full suite of 2x leverage?
Corn and wheat are out there, the leveraged funds, and we just listed those, so they're they got to catch some wind and get going, and we're making a few improvements there in terms of information flow so that people can look at those. But once things are in the headline, we'll see. Again, every fund has a fixed cost. You just don't want to be throwing the 2x out there.
And who's your regulator? Who approves your funds? Is it CFTC
both,
or SEC?
Unfortunately, both. Yeah.
Okay. Yeah. Well, that's tough.
All
right. Must be fun for whoever's working in your compliance department. I can't imagine that's gonna be fun.
I have a great team, and their patience is amazing. Yeah.
I'll bet. That's awesome. Thanks so much, Sal.
Happy trading.
That was great. We would definitely have Sal on again. Yeah,
absolutely. And because this stuff's in the news right now, did you hear how knowledgeable he is talking about, all these, because he's traded through these events in the past. You heard him talking about Russia, right? So when something like this happens, all this tariff news, he knows where to look. Like he was saying about soybeans, like nothing that they do from a tariff perspective is really going to affect the fact that, at a certain level, this is going to be a buy. So having that sort of deep knowledge, he's been in the commodities market, said something for like 40 years. So that's just fantastic. I love talking to guys with this specific knowledge in these different markets. Really
likewise. Good. So thanks for coming on, Sal. That was wonderful. Every time I talk to someone who is in commodities, because I don't know a lot about, like, my commodities knowledge starts and ends with like whatever ETF I have most recently traded, right, or bought. Yeah,
dude, I'll dabble in these things. I'm a fan. Like everything I was just saying, these things, oftentimes the stock market's a mess, cryptos are in a corrective mode and you're looking for things to trade, and I get antsy. I start looking at bond funds and currency funds, and these commodity funds more often than not are the ones that are trending in those times where, nothing else is. So it's always good to have more options. I'm a big fan. Like I was just saying to Sal, I hope that they list more and more of these in the future. Let's go with the leverage stuff. That's always fun.
Yeah, I mean,
I've been opening up to the leverage stuff. I've been trading a lot of this leverage shenanigans, and I don't hate it.
Commodities are just a wild market. I remember, like a couple of years ago, maybe it was the war in Ukraine. I mean, things were just going off the rails, right? Like things were just ripping up every day, right? It's just a wild market.
Look what he said about the longevity of the trends.
Yeah, and he echoed JC's sentiment, right? It's the same sentiment, right? Which is that the cycles in commodities don't last weeks. They don't even last months. They last years, right?
Some of the best trend followers, they love commodities markets. Ask Jerry Parker how he feels about these kinds of markets, right? Because you can buy the dip, you can sit back and wait. These guys have like the longest time frames because they're smart, right? Trends are more reliable the more you zoom out on them.
Oh, you know what?
And they're just buying these things. They're just buying all day. And Jason Purz will come on and tell you a lot about this too. I mean, they trend, but the dips are hardcore corrections in these 30, 40%. Try trading lumber. So you got to be like the most disciplined trend follower to be able to sit through that, right? And zoom out and say, no, primary trend's still intact. I could buy this down for buying something down 40% is not easy for most people to do. You know that?
Yeah, no kidding. I should have asked Sal about the average turnover in his funds. I do wonder if people use them primarily as trading instruments or longer term. But whatever.
Based on the fluctuations in AUM that he was quoting, it sounds like there's a lot of turnover.
What did he say? From $80 to $800 million in wheat from
yeah.
But it also goes to show that like there's not many vehicles out there. Like if you don't want to get involved in futures, what are you going to do? There's only so many places to go.
It's cool that there are moments where people will like flood into these.
Very cool. Right. Very cool for him. All right. 9:28 here. We're going to open in like a minute and change. As far as what's happening this morning, I mean, stocks going to hit the hardest are all the crypto stocks. And then like, GM and Ford are going to hit pretty hard. At least they were last I checked. It's all tariff stuff, right? I can't remember a weekend like this past weekend. And JC said his dad texting him. Sean's talking about shorting the S&Ps with his wife. I didn't have anyone like talk to me specifically, but just on social media, man, the amount of anxiety this weekend was through the freaking roof. Frankly, I can't remember. You have to go back to like COVID, I think, to have a weekend where like people were freaking out about the market so much as they were this past weekend. Maybe it's because like the tariff stuff, the headlines hit like Saturday morning. So we had like all weekend to like let it marinate, but or even Friday night. But gosh, you would have thought that this morning was going to be the end of the damn world based on what I was seeing on mostly on Reddit, not so much Twitter for me because Twitter is curated. I get a lot of my good takes on Twitter because I follow smart people like you and JC and others. So I get my good takes from Twitter. I get my bad takes from Reddit. Man, the amount of anxiety this weekend was through the roof, frankly. I don't even understand it because it's not like this is new. We've been through this before. We went through this in 2016. Everyone's just assuming like people are talking about, do I sell half my portfolio or all my portfolio on Monday, right? What should I do? You tell me. It's like, guys, what are you doing here? We're down one. We're down. What are we down this morning? 1.5%. Chill.
No, you're good. You're right.
Chill.
Can I share my screen?
You are always welcome to do that.
They will do some live charting. I just want to show these VWAPs that I keep talking about, right? Give some live examples of kind of how you navigate this kind of volatility or how you step in, right? And buy these dips and get some killer entries because you could do like a little explorative buy, right? On some weakness. You know what that means? You know what I'm talking about? Scale into a position. Or you never want to buy a full position on weakness, right? Slamming into what you think or hope will be support. You got a level that's so good, right? You can't dip your toes in, buy a quarter position there. Why not? Why not? See what happens. You could get blown out of it. That's fine. Take yourself out real tight. Right? Explorative buy at a little VWAP support.
You want to share your screen?
How do I
go in the middle there where it says like share screen, and it's a little up arrow, and you can share.
All right, we're gonna share this.
Oh, look at this.
Good
live. What do we
charting.
got going on? Trading View. Okay, I see you.
JC, what are you missing? All right, S&P 500 futures. We got some big levels here. Let's talk about them. And I'm just for fun, I'm going to drop them at all my levels. Okay, so we'll even give another one. Starting here, first one is dropped the yen yo-yo day, right? Bank of Japan, big volatility, August 5th, I believe that was. So that's the first anchor. In this case, we bottomed on August 7th, right? So I'm dropping it from there. Great. So you saw that come in as support at the lows just last week or a couple weeks ago, January 13th, right? Okay, you drop another one here at the September low. That's been a good level. See, when we retested or when we corrected and retested the July highs here over in November, early November, right before the election, that's the VWAP that we bounced off of. Then always anchor your VWAPs from these big days, right? So this is the election candles.
Oh wait, let's talk about that. Talk about like the importance of picking a big, like an important day, the importance of picking an important day to anchor your VWAP.
A lot of buyers and sellers. I want to know what the biggest money is doing, right? And the biggest money, they're active on those big volume days, right? right after an election, right after a big event, right after earnings. And you could see it in the volume. So Brian Shannon will tell you things like anchor from January 1. You could anchor from beginning of quarters, right? That's an important place for a lot of institutional money managers. You can anchor from an earnings day candle, right? Like a big breakaway gap earnings candle. You can anchor, boy, I can't tell you how many times it's been an FOMC day, right? That you get a big reversal day for the broader market. You want to anchor your indexes from that. It could be a CPI day. We had that. We had a CPI day mark the bottom in the market this cycle, 2022. Right. So you want to anchor from these big events, but then you can also just use your brain and say, there was a lot of volume here that day, right? 2 times, 3 times average volume. That's interesting. And you won't get that with an index, but with individual equities all day, you'll get 3, 4, 5x times volume, 10x times volume. You know, somebody big just came into that stock, right? Or came out of it. Either way, I want to know from that day, where's it going, right? Are we in the money or not? Or is the average buyer in the money or not? That's what the VWAP tells you. So look at how well it works. And then basically you have a grid line, right? All these little signposts to help you in and out of trades in volatile times in moments like this. Because what will happen is you won't do anything because you'll be worried or you'll be scared of the Canada fentanyl headlines and you won't buy the dip. And then you'll look back in a couple of weeks and you'll say, oh my, that dip was just like this dip and that dip and this dip and that dip. It was just another one of those. And I should have bought it, but I didn't know where to get in. Well, drop some VWAPs, right? Use pivot lows. How about this? How about this shelf of support that's been in place since November now, right? 1 times, 2 times, 3 times. How about if we go back there? Hey, I'll dip my toes in at that level, right? So that's what, 58.70 in the S&Ps. Let's look at some other things here, Spencer. Use the VWAPs. I'm going to keep saying it. Election candle anchored the VWAP. This is the Bitcoin. This is not a coincidence. Spencer, tell me it's a coincidence.
I mean, it's relevant until it's not, though, right? I mean,
relevant until it's not. Do you have something better to help you navigate?
No, of course
trades?
not. I would, but I would, I see this, like that wick from this morning. Obviously, didn't respect diddly squat, but
the wick from this morning did not respect what? This is TA. This is a level of interest working today's action. Let's clarify that, right? This coming down, shaking through it, then popping back up right at it. This is the market today, this little indecision, right? It's telling us, hey, this VWAP support level, this big blue line here, that matters. We're paying attention to it. We're reacting at it. We're getting volatility around this level. I mean, you could zoom in and make it even more clear. We come down. Big blast through the VWAP. Look at that massive candle. Look at the volume coming in right at the VWAP. I'm drilling in now, showing you a 2-hour chart, right? This is real. Then we pop back up above it. Oh, look at where we pop off of. Support at these pivot lows. These levels matter, and they can really help you out in these situations. So I think for Bitcoin, if we were to give some, levels that I think you want to pay attention to right now, maybe help you to navigate, you have the pivot lows here. That'll be the first level to kind of dip your toes in, call it 91.5, Spencer, 91.5 here at the lower bounds of this range. Okay. And then you got this VWAP here, which is, I mean, how many times do you have to see the buyer step in and defend this VWAP before you say, oh my God, it's so great. This level works so well. I'm going to buy against it. Right now, that VWAP's 94.9, call it 95. And then if you want confirmation, how do you get confirmation on something like this, right? So I'm telling you, start scaling in. What I would do is start scaling in at these levels. Where am I going to finish it and say, okay, the trade is on, I'm in, this is great. And then I'll establish my stop level, probably move it up. It's here at the VWAP from the pivot highs. That tells me once we're back above, that's not until 103. Right? So you could even trade that range, 94, 103. You could trade that range right now. In Solana, I'm going to show you a range in a second that's definitely tradable and I might dabble in. But not until we're back above 103 am I going to say, okay, buyers are now back in control of all the trends, not just the primary, but the tactical trend too. And then I give myself like the all clear and I'm in. Let's go. And then I expect that trade to kind of play out over the course of weeks or months.
No,
right? Once
this only works, I feel like, because we've gotten a couple, like the 2 anchoring points, right? On this chart were from election day, right? And then what was the on the upside? What was that from? Was that just a recent higher the move?
Right here, this is the pivot high.
Okay,
it's the all-time high.
Yeah. So in this case, like, they're relatively clean, or they're easy to identify, these anchor points, right?
Yeah.
But it might not always be that easy, right, to identify anchor points.
It's not hard. if you know what you're doing, if you read Brian Shan's books, if you watch his work, if you watch our morning show, if you watch Kenny for 5 minutes every morning, if you listen to what I'm saying, you'll figure it out. Spencer, you're anchoring from big days. That's it. When there's unusual investor interest or activity, you want to anchor from there. When there's a big headline, when there's a big earnings report, when somebody cuts their dividend, when Powell comes out and pumps the market and we get these monster engulfing candles across the board, go anchor from there. Right. But just a little bit of thought.
No, I'm just playing devil's advocate. I'm for all of this. I'm like, especially.
I mean, if you were to go drop VWAPs on this chart, right? You were to zoom out a couple months, you wouldn't anchor.
No,
from
I
the
definitely
election?
would.
You would know.
Yeah.
Yeah, you would know.
Yeah.
To do that. So, yeah, just with a little bit of learning, the VWAP can be a tremendous tool for your everyday investor. I really do believe that. It's nothing complicated. There's no crazy math behind it. It's really it's one of the best things that we have in the stock market, in all markets, to help guide us. Can we do Solana and then move on?
We have Sam lurking in the background as well.
So I'm gonna trade this thing, I think, because now I got the FOMO. I sold all my soul, or most of my soul. And now I'm looking at this thing coming down. Oh, I'm licking my chops on this one. So this VWAP has been just incredible. I use this to get out of my trade. I used it to try to get back into my trade. I'm going to keep on using it. I'm thinking about now adding back here. So this is Sol off of the VWAP, anchored from August 5th, yen yo-yo day, right? So important, so good. Then I got the green one here. That's from the election candle. So you see how that came in, supported price a little bit on the post-election rally. Then it finally broke here, right? Broke here, retested, and then back down to the August VWAP, and then back up to the election VWAP, right? You could have traded that range beautifully. I think you could trade that range again right now, because for now, Solana's not looking good. Tactical trend's a bit broken here. Sellers are in control, but they can't break it down below this key August VWAP. And you just see time and time again, we keep stepping in here. So a big shake below it. I mean, we touched down at like 175 last night. And then look at, again, Spencer, that big volatility right at that VWAP. The market telling me, Steve, you're right. You're right to anchor this VWAP here on your chart, right? I keep seeing that. That's reinforcement. It's reinforcing what I'm doing. I'm using the right tools. It's fantastic, right? Now we're getting this chop at the VWAP. This is all coiled up here beautifully. I mean, why not do a little something like this if you want a boogie on a nice little trade? Bang, you could buy the breakout here, this little coil. That happens around 200. Trade it back to this VWAP resistance that's coming in around 225. Whatever. We get bored, right? We look for trades. This is a fun one. I think it's doable. With Solana, if you anchor at the pivot highs as well, it's going to come in right up around 240. Call that the ultimate confirmation. I think you could jump some confirmation here at about 225, though. If we break it, I don't know if we break it. The cryptos have been really weak. We're going to do one more just for fun. I'm interested in this H bar lately. These things absolutely ripped, like Spencer was saying with the fart coin, and then they gave back so much. I don't think the bull market for cryptos is over. Look at the H bar. That's from the election candle, right? Coming in, slammed right into it. You also have some, breakdown support here, right? Which we shake below, now back above. I like this in the H bar. I can get a sweet entry here at 23. This thing was at 40 not long ago. Get it almost half price, 50% off. This is 2 weeks later. Getting it right here at a logical level. You keep your stops super tight. That could be a great trade. And for something like this, you drop that VWAP from the pivot highs. There's your ultimate confirmation. That's not going to come in for a while. So you could also use it as a target, right? Or take profits on this trade. So if I'm talking about getting in here at this VWAP, 23, all the way up to the VWAP from the pivot highs, 31, that's a huge trade. And you see how fast these things move. Look at Ripple. Slammed right down to that VWAP. All of them are this way from these election VWAPs. So use these levels. They're there to help us. Everybody else is looking at them. So we might as well too. That's all I got.
I freaking love it, man. Like you said,
More.
It doesn't have to be super duper complicated with 15 lines on your chart, right? You don't need all that.
I don't have too many lines.
And this is also kind of the beauty of crypto is the technicals are so pure with crypto because there's nothing else. There's no other analysis that you can really do, right? It's just this. So it's
love the VWAP. Shout out hymns in the chat.
What?
Whew. We doubled down on that one. We have such a great hit rate when we buy things more than once. So we take multiple shots. I talk about this all the time. I have no problem losing money and trying again. because we know from a risk reward perspective, we lose a little, fine. All that will be paid back and more if we hit big on some of these patterns. The HIMS, the relative strength this one was showing, it's like the HIMS doesn't give a shit about tariffs. They're gonna sell their ED pills. They're gonna sell them all over the place. Tariffs aren't gonna affect them. They're not even paying attention.
What a strange divergence between HIMS and the other.
Telehealth has arrived. Rick, shout out Slick Rick on the analyst team, has been all over this trend. And we're looking, frankly, we are looking for stocks that fit this theme that are breaking out of big bases. EDOC is the index that we're really kind of using to help us out here. It's got a great list of names in it. Some of them look so good. I'll say with the HIMS, look, if we're above these pivot highs, this thing's probably going to keep running. Momentum is a hell of a drug. And the momentum behind this name right now is not to be messed with, especially with a big potential bullish catalyst coming up. They have their earnings report in about a month. So this one, this strong ahead of earnings, what's it telling us? Maybe it's going to, pull some of those earnings gains forward, but it's probably still got, some left in the tank. We just look at a simple measure of momentum here. RSI, we're overbought, but it's
I was just going to
crazy.
say HIMS between Novo and Eli Lilly. I mean, you talk about weight loss drugs. HIMS is.
We sold like 3/4 of our position because we had 2 different call contracts. So we closed one entirely, let the other ride, but took like half off of it. In this market, you want to do that, right? You got to pay yourself. You got to follow your rules. You don't want to be, you don't want to get too aggressive with taking profits, right? Because it's taken right away from you. What if HIMS was involved in this whole like tariff move sell off this morning, right? We've been given a ton of profits back. But instead it's sitting here holding up well. So that's information. We can always buy more calls if we still like it.
All right, Sam, you here? Sammy G in the house? We got Sam. If there's anyone I can count on to like drop a random chart at like 3:00 on a Sunday, it's Sam. He's no one's talking about Canadian copper. I love Canadian copper. I don't know. I don't know what chart you have, Sam, but whatever you have.
And hold on. The thing, one hole, Strazza, if you don't like Lilly, you don't like HIMS, right? It's not that simple. Actually, go back and look at what HIMS has done. Starting during the pandemic, they were selling anxiety and depression pills then. They are on these trends so quickly. Whenever there's an opportunity in the market, they'll come out and sell you drugs over the internet whenever it's allowed. So right now, sure, it's the weight loss stuff, but they continue to just hit after hit whenever there's an opportunity. They're there. I love the way the management's kind of running this company. They're so nimble, so quick to market. So as long as that remains the case, I think they keep pouncing on these opportunities. I get that for now they're selling GLP-1s. I understand that. I'm so bearish. Sam the man.
Mr. Gallo.
Dude.
How's it going?
What happened to the Jayhawks this weekend?
I don't really want to talk about it. That was really painful.
That's
coming on the heels of that Houston loss, which is one of the worst losses I've ever seen.
Not good.
Not good at all. I think you can short the Jayhawks to 0.
So what we're talking about, they're just self-destructing. Just like the second half comes around and they like stop playing basketball. It's really, I don't know. You think they're like throwing the games? They're dabbling too much on the DraftKings and the Hard Rock bets?
That definitely could be it. Yeah. I'm a big Flory Budunga guy.
Say more.
And Bill Self just keeps on benching him in the second half, and we keep choking in the second half. So I'm curious if we can play him all 20 minutes in the second half. What will happen then?
And here's what I'll say too. For the players, there's too many veterans on that team to be crumbling like that. Some of these guys with Dickinson and the guy with the cool hair.
He's like 30 years old. Yeah.
But they've been there for, right? Like these are seniors now. These guys have been there. They should, come on. You got to.
All right.
I'm just saying. Huge win for UConn this weekend. All right, Sam. What do you got?
Wonderful. Sam.
I actually brought along some sports futures. I want to talk about this trade we saw over the weekend with the Dallas Mavericks and the Los Angeles Lakers. I think this is the biggest short in the history of the NBA.
Explain what you're looking at. What am I looking at here?
So right here we have the odds to win the NBA Finals. On the far left is the beginning of the season, and then on the far right you have today. And you can see that the Lakers have spiked on this trade, and the Mavericks are hitting new lows for the season on the heels of this trade.
So
that makes sense.
I'll say that again.
What's the trade though? Aren't the Lakers like they're definitely going to win?
He's saying short the Lakers is what he's saying.
I think you can.
You don't think they're going to win it?
I don't think either of them are going to win it, but I think it's interesting to see the Mavericks. I just think this is the biggest short of all time. Luka is. I think he's been on the first team All NBA 5 times, and he's 25 years old. That has never ever happened before, and he was due for a supermax contract this summer, which is like, I don't know, $350 million in 5 years, a ridiculous amount of money, and the Mavericks didn't want to pay that. So we'll see. It's hard to tell at this point who the real winner is. The market is voting on the Lakers being the winner with this Luka trade.
So what are you saying? Like you're saying that Mark Cuban's just a cheapskate?
No, Mark Cuban's not involved in it.
I don't think Mark Cuban matters.
He sold the team. Yeah. Anyway,
I think he just cheers for them on the sidelines.
Sectors, Sam.
Yeah. No. So I was looking at the sectors. Jeff Hirsch has the saying of as January goes, so goes the year.
Dude.
So I think there's a lot of value.
What's the only green sector today? It's healthcare, baby.
Yeah, healthcare. Healthcare has gotten the shit kicked out of it for quite some time now, and I was looking at healthcare on a relative basis. I didn't bring the chart along, but if you just pull it up on your machine, it's RSPH relative to RSP. It's failing a massive potential distribution pattern. So I think there's a lot of potential rotation into healthcare, and you saw that in January for sure.
I love this, Sam. So the first question that comes to my mind while I hear this is: do you buy the good ones, or do you buy the bad ones? Like healthcare.
I think you always buy the good ones, but
so
that's just
devices then.
Yeah, if you go to the healthcare bubbles, skip this one, healthcare bubbles.
Oh,
so right here, you can see in the upper right-hand corner the leaders, and then in the bottom left-hand corner, you can see the laggards. And this is based on the 52-week, the percentage from 52-week low, which is on the y-axis. And then you have percentage from 52-week high on the x-axis.
So I see anti-GLP-1s in the top right. Am I seeing that right? Pod and DVA, right?
So no, Pod is actually quite an interesting company. You were asking me about Dexcom the other week. So this is the closest competitor to Dexcom. They have some insulin pumps.
Yeah, that's my point. That's in the short basket. That's the non-GLP-1s, right? That's what you get what I'm saying. The hedge fund trade for years.
I think that's a stretch, man. I think you're really reaching on that.
Yeah, I think this is definitely
dialysis stuff because diabetes isn't going to be a thing anymore.
Yeah, I think it's.
Yeah, you sound crazy right now, Strazza.
People have been trading that book. I'm telling you, so for a fact, hedge funds have been trading that.
I can tell you that Pod is the leader of healthcare, and it's not.
Then I don't know why DaVita looks the way it does. Then
because diabetes aren't going anywhere.
But if people are betting on the fact that diabetes would not be is going to be a thing in the past, then it wouldn't. What you're saying they were, right? Isn't that where?
Yeah, right. That Lilly was going to cure it, so people were shorting DaVita.
Oh well, they got their face ripped off, so I don't know what to tell you.
Yeah, my brother's also chiming in on the chat here. It's more of a type 1 diabetes play.
Hey, that's right.
So yeah, cool. I think you're thinking of fat people that aren't type 1 diabetics that are on Ozempic. You're talking about that as the short thesis, but people are always going to be type 1 diabetic.
All right.
Your fault.
I'm looking for medical devices. I see ISRG. I see Boston Scientific.
Yeah. We were talking about in New York, Globus Medical. That's ticker GMed. That is it's a little bit more of a niche version of the Intuitive Surgical. So like Intuitive Surgical does surgeries on all types of parts of the body, but GMed is specifically focused on the spine. So if you're bullish on back pain, I like the GMed.
Big market.
Yeah, it's a huge market. Yeah. And it's like I'm sitting in my desk chair all day long, every single day of the week. I anticipate some back pain in my not too distant future.
Dude,
you got to get a foot tub.
You're like 15 years old. You're talking about back pain. Come on.
15.
Come on.
You got to soak your feet, Sam. And Epsom
I
salt.
would love to get a foot
tub.
bath.
Yeah, do that.
What you got to send me what you have.
I will. It was definitely made in China. It works great. So the GMed chart just broke out of a nice base.
Yeah.
Have you seen this Base and Waters Corporation? I think that's a competitor too.
Yeah, I actually funny you mentioned that. I sent that one to JC for the conference call. That's a great looking chart, and it goes back maybe a decade.
All right, so you heard it here.
Yeah.
From Sam the man. We're buying the leaders. We're buying the best looking ones in healthcare. I like that. I do. I support this message, but give us something on biotechs before we get off of this topic. Like, are the biotechs coming out of this base? Are they not? What is breath like? I know that you're looking at more of these charts at the individual component level than anybody.
Yeah, no, I think they eventually get the job done, but I don't think it'll happen before July, let's call it. Maybe in the latter half of the year, we see that. But as always, biotech is the most bifurcated market in the world. So you can always find huge winners and you can always find huge losers that are frauds and have terrible science. So I really love that about it.
I think that's the more important point, right?
Yeah.
Whether biotech is a leader or not, the subgroup level, there will be leaders within it. There will be stocks making new highs. I just added to my Madrigal. I think we're finally coming out of this base.
That is my favorite, by the way.
I
You
heard
asked me what my favorite is, but that chart is off the freaking charts.
It's a great base. So Sam was giving a presentation at the Portfolio Accelerators talking about Madrigal. I forgot about it. Like, I forget about these. I stop out of them. You know what I mean? And I forget. And I look back at the chart. I said, so I was right there. I was buying the MDGL while you're talking about it.
Yeah. And you have Julian Baker. I think he's the director there. So I love having Julian Baker involved. You know,
Baker Bros are so in this one.
Yeah, they're the goats.
All right. So do you want to talk about financials at all, Sam?
Speaking of,
we can talk about financials if you want to. I know
Strazza
likes his financials.
Or we can do recess. Up to you guys.
Excited for the Super Bowl, Sam?
Yeah, I am.
What do you think about the way everybody's treating your Chiefs on the social media?
You know, we talk about sentiment all the time in the stock markets. People hate China so much, and we're out here looking for buying opportunities in China. And I think that should be the same mindset for sports. Everybody hates the Chiefs, but they've won the last 2 Super Bowls. Why the hell won't they win again?
Sentiment is definitely at an extreme.
It is.
Right. You're right.
I'm long. I think I have like $10 on KC money line.
When you're hated this much, you're usually doing pretty well.
That's right. Yeah.
Not easy.
And I don't know why people hate on Taylor Swift so much.
I think is this a short squeeze on the Chiefs? Is that what this is?
Yeah.
They've been squeezing.
They're squeezing for a little while now. It's true.
Wow.
Nobody has ever three-peated in the NFL. So
we are all aware.
They're about to make history.
And that's incredible. If that happens, shocking, amazing. I thought the Huskies would be the ones three-peating this year, but it looks like the Chiefs have a much better shot.
Yeah. Bullish Kansas.
Man.
Bullish Kansas. Bullish the state of Kansas.
You're the best, Sam.
We're talking about wheat today. We're talking about corn.
Yeah, that was such a great conversation you guys had.
You like the interview? Sal's cool, right?
Yeah. Awesome. How have I never met this guy?
That's what I was saying.
It's because he's in Connecticut and you're in God knows where in the Midwest.
Shout out Easton, Connecticut. Just a lovely town. Really lovely place.
All right, let's do some recess and get out of here.
Yeah.
We got things. I'm bummed that JC left. I saw a joke on Twitter that I thought he would appreciate this morning, which is that's a very JC thing to say. He always says it's not champagne unless it comes from champagne, right?
That's good. That's good.
I just wanted to...
Wine jokes. We need the button.
Yeah, that's true. We don't have a button for anything wine related.
You got anything, Sam?
Yeah. So yesterday was one of the nicest days we've had here in Kansas in a very long time. It was like 50 degrees, felt like summer. I loved it. And I went and played some pickleball with my family.
Not
Ooh.
golf. Not
It
golf.
was really fun. And I unfortunately lost to my brother in the singles tournament.
Wow.
But I'm going to keep practicing and I'm going to get him back.
A little family pickle. That's so nice.
It was delightful.
Who's the better athlete? You or your brother?
Depends on what you're talking about.
Come on.
I think I can beat him on the golf course, but
Okay, so you got some.
pickleball court, not so much.
All right, got it. All right, good deal. Good deal. I also had some beautiful weather. We went to the beach yesterday. It was like freezing cold here last week, and then all of a sudden 80-degree weather just rolls in. So we ran to the beach. One of the most beautiful beaches in the country is called Bahia Honda. It's how they pronounce it. It's about 40 minutes north from me. It's right at the 7 Mile Bridge. If you're going to go beaching, like it's a 30-minute drive, but it's well worth it because you're basically driving through the middle of the ocean. So it's a lovely drive. It could be longer. It'd be fine. So we make like a day out of it. We stop at like our favorite food trucks. We get some lunch, whatever. Oh, I have a funny story about a deli. But if you're going to do that, you got to bring all the gear, right? So like when you go beaching like that, you need the umbrella. You need the beach blanket. You need like an overpriced cooler. I have like rocking chairs, best investment ever. It's like really nice like chairs I got from West Marine, but they rock and you can hang out and like you could recline. We stayed for 4.5 hours. I would have stayed all night. But if you're gonna go beaching like that, you gotta really come prepared. You gotta bring a lot of food, a lot of drinks. You gotta stay hydrated. You need electrolytes in your water. You bring a little music, and we were just hanging out like all day, taking naps. So I haven't done like a beach day like that in a while. I just want to say, when you're beaching, beach right, and you'll have a great time.
I'll give a PSA. I had an eventful weekend as well. Not for the best reason. I was at Burlington stores, whatever they call that, Burlington Coat Factory, whatever it's called now. Well, it's a great question. Why?
Spencer just hangs out in department stores on the weekends.
No, I was there.
Closed.
We shouldn't have gone. Is the moral of the story is don't go to Burlington because someone just jacked my mom's purse, just jacked it right out of the shopping cart and made off with it. So actually, no, he ditched the purse, but he took the shit in the purse, which is the important stuff. So,
that's awful. Poor mother. Oh, that's
yeah.
Absolutely.
So keep your head on a swivel. You know, always watch your six, as they say. Always looking around. You never know.
You can't even go shopping. You can't even go shopping anymore. All we have is Amazon. You can't go to these stores. Dollar Trees are not safe.
Yeah. Just
Going to a Dollar Tree.
If you walk past the same person like 4 times, just maybe move away from them. That's all I'm saying.
Was this at a mall?
No. Well, a strip mall, which in New Jersey is always, right. That's what we got. Okay. Real fast. It's 10 o'clock, so let's go. But JC's conference calls tonight. I'm going to drop the link once again. If you are a member of AAC Premium, you already have the link. If you are not, there is a link right there to join and get access to tonight's call. That's the first thing. Second thing is Steve was talking about the HIMS trade from last week. That was a breakout multiplier trade. If you are in breakout multiplier, you got that trade. I guess, was it last week or was it the week prior at this point? At that point,
there's a relentless bid for this stock right now. It's flipping green here. Was what we put
the HIMS trade that was from 2 Fridays ago, wasn't it? Or was it from
week before? We doubled down. So we did on the HIMS. We like the setup so much. Typically, we would roll the position. So we would sell the existing calls, right, and buy new ones. We said, hold on to the old ones. They're probably still going to hit, but let's buy new ones anyways. And then we got rid of 3/4 of all those calls Friday.
So if you want trades like that, it's breakoutmultiplier.com, breakoutmultiplier.com. That's where Steve is posting these trades like HIMS. And as you heard today, it worked out for him very well. It is Monday. We have chart requests live coming on at 1 o'clock. So send in your requests, questions at stockmarketmedia.com. And we'll see you guys tomorrow. I won't be on the show, but JC and Steve will be here and maybe some others as well. So go make some money. All right.
Happy Monday, everybody.
All I got.
Happy Monday.
Happy Monday indeed.
I can't take no loss. I don't even know what it